Thursday's edition of Trading Buddies, and thank you, of course, for being our Trading Buddies. It's nice to have you on board wherever you may be in God's green garden on this, the 6th day of April 2023. Good Friday Eve, is that a thing? It's what it is, and, well, in my book, that's what it is. And until someone tells me different, that's exactly how it will remain, for me anyway. All right, let's get stuck in, shall we, and have a look and see what's going on around the place. We have had a pretty decent week on the gold trade, I've got to say, on the gold breakout trade. If you've been trading that, I just had a look. I haven't been trading it since Monday. I traded on Monday, of course, when I was here live, but didn't trade it Tuesday, didn't trade it Wednesday, but I see some pretty good results there as gold has actually taken off and burst through the 2,000 mark as we anticipated it may. And, of course, it has now come back. Maybe to retest that, I'm not sure about that, but we'll see. Before we do that, let's go and talk about orders that I have in the market at the moment. One of them is, actually, I've only got one in the market at the moment. The trailing stop on dollar versus the CAD was hit overnight. And interesting. Where am I talking? Sorry, got distracted. Dollar versus the CAD. Yes, there we go. So we got in here. We trailed the stop down to about here somewhere. I can't remember exactly where I had it, just about in line with those highs. And as you can see, yesterday, price came up, took the trailing stop. That's okay. I figured that we may retrace to about this level, maybe this level, and maybe even this level. So I'm not that concerned about being out of that trade at the moment. And, of course, we did bank some decent money, so all good. I did have a bit of a quandary this morning with a couple of them. Dollar yen I like. We spoke about that last week when we bounced off the bottom of this ascending channel. Well, we're back there again and got another candle that I do like to trade. Proximity to the weekly pivot led me in a different direction, and that direction was actually with CAD yen. CAD yen because I do believe there's better reward to risk available in the first half of the trade, and potential is there for it to complete reverse, of course. And if that were to be the case, then we'll find our way up here somewhere, I should think, and that should be pretty cool. Righto, the level, if you wanted to follow that for the entry, is 98.13, and the stop loss is 97.04, I think. That makes sense. Yes, 97.04. And the first take profit is 64 pips above there at 98.75. 98.75 is right there on that level. There is a confluence here between the trade line and the resistance area. So that's an obvious first take profit on CAD versus the yen. Of course, the kissing cousin to that one, CAD Swissy, that I've been trying to get long at on for the longest time, is once again setting up the same as dollar yen, the same as CAD yen. Why am I favouring CAD yen over CAD Swiss? Well, I think the reward to risk on the first bit of the trade is better. That's why. So it's CAD yen instead of CAD Swiss. You could halve your risk on either if you so chose, and the same with dollar yen. The reward for from there, so pretty much the daily pivot down to there, and we're right in the middle of that, so I don't mind that. The low is 2007, so we'll use that as our entry for the short. 2007, and for the long, come down here, little fella, is 2021. So 2007, 2021. Right, let's place the orders. As I said, this has had a cracking week thus far. We'll go with the long first. 2021 and 2007. 2007. Target. We'll just go with the pivots again, and that will be DS2, which is around about 1990. Is that 6 or 8? 6, 8, sorry. 1998. That will be the target, which is about what? This is a buy. Concentrate. There's our target, 2031. So 2032, actually. 2032, which gives us, what, $11 for a risk of 14. So not fantastic, but not the worst. And it is before that high, so that's all good. The short is the reverse of that, of course. So let's place the short. And sell stop at 2007. Stop loss 2021. Take profit 19. What did I say? Can't remember. 1998. That's right. 1998. Right. So the potential reward on this one is $9 for a risk of 14. So it's even worse reward to risk. But that's the game we're playing. So right, shorts in, longs in, one cancels the other, you know the rest. Okay, let's go for a little trip around the place. A few of you weren't in the room when I mentioned that I have gone and placed an order on CAD Yen long. The entry level for which is at 98.13, and the stop loss is at 97.04, and the first take profit is at 98.75. Why, I hear you resoundingly ask. I suppose you want an answer. Well, really, I'm playing double bottom, but I'm also playing, hang on a sec, and I'll just go a bit wider. I'm also playing here, I can't remember which one this comes off. That one doesn't matter. Really doesn't. Maybe it was that one. That looks more like it. Playing what looks to me to be a bit of a false break. It hasn't really set up there on the weekly. But if I have a look at this level here, this horizontal level, I can see that it's broken back above there and now retested it. And the pivots. And that's the reason I like this one. I think we've got a clear TP1 in this area, 98.75, whatever I said it was. And for that reason, and I like the candle as well. It's a low test bar, but it's also got a red body, suggesting to me that if the bears are in control, price will go back to here. And if they're not, the reverse happens and we go to resistance, which is where we've got our catching area. There were options galore here today. Earlier in the week, I did place an order long Aussie yen, trading this scenario here. Obviously, that hasn't triggered and the order has expired. We'll get rid of that. But I think this is all setting up for full moon today. Brilliant. Excellent. Swee's pointing out that it's full moon today, which, of course, if you're not aware, that there are times when the market reacts to without getting into it. There's various methods of doing that. There's moons, there's tides, there's time by degrees. There's all sorts of ways to use the elements, if you like, to assess what the market's doing and what the market may do. So Sweez pointed out that today is one of those days, and really what that means, in my opinion, is that the market is preparing to do something, generally reversing momentum. And that's what Sweez looking for today, I think, as well. And I probably will be as well. I want to ask Ash when he comes in about the FTSE, actually, because the FTSE looks interesting to me. And I'll point that out why in a little moment. So Aussie yen, again, one of those which really not a trade for me now. I'd have to see a false break of support or another higher low, something like that. Kiwi CAD we tried to get into earlier in the week. We did get into earlier in the week. That's right. We trailed our stop to entry and finished up a very small winner. Dollar CAD you know about. I've mentioned that before. We got short dollar CAD 3 weeks ago, and we trailed our stop down to about here somewhere in line with those highs, and that was taken out yesterday. Decent winner, dollar CAD. Aussie CAD looks very much like a false break to me. We placed this order earlier in the week above this bar here, and that hasn't triggered either. Still got that in my sights though. Why? Because this bar here, I'll just go a little bit tighter. This bar here, this massive bullish engulfing bar, is still driving current momentum. Inside bar, current inside bar. So I think this has still got potential. And for that reason, I'll be looking for Aussie CAD on a smaller time frame. A little double bottom sitting there. I wouldn't mind seeing a false break of support in here somewhere. Maybe that's worth looking at during this session. Yeah, why not? We'll keep our eye on that one. False break. See how we go. CAD Swiss, I think I just mentioned that I've been hunting this for ages. It's set up for me right now, but I've refused to take it. I've chosen CAD Yen instead, mainly because of the proximity to the pivot here. But this is a buy zone, absolutely. If it goes, so will CAD Yen, I would imagine. And for that reason, the reward to risk reason, I've gone with CAD Yen. Been waiting for Euro Aussie for the longest time. It's staying above this level here, but not the horizontal level. Still fighting with that. So again, if price comes back underneath and gives me a lower high, probably talking next week now. That's a weekly chart, but it's very, very similar on the daily. You can see this very, very toppy price action, but price hasn't yet come back into here and given me the lower high. Until it does, I'm probably still out of Euro Aussie. But it's there on the watch list, and it is a game changer bar short today with that big reversal bar there yesterday. I'm not a one bar reversal type trader, so I need to see confirmation of that, and that's not there as yet. On my watch list is really only one extra one today, and it is Aussie Swiss. And where is that? Aussie Swiss. There it is. Now, I did say before, Aussie CAD, I think it was, or maybe Aussie Yen, was setting up exactly the same way as this. And was Aussie CAD? No, must have been Aussie Yen. Yes, Aussie Yen. So you can see the setup trade line, slingshot candle pattern off the monthly pivot has fallen away quite a bit. The reason I like Aussie Swissy more than I like Aussie Yen is exactly the same as I described on the CAD Yen and CAD Swissy pair. There is a better reward to risk before I hit a resistance level here, which is pretty close to that entry. Now, also, we can play this as a higher low. Now, down here, get a far better price. So I'll be looking for that to happen. But Aussie Swiss has already given us that better price, I think, with this bar here. Setup still there for the long with a better reward or a better reward available in the first instance. I'm pretty keen now to look for an entry long here on Aussie versus the Swissy. May come sooner than I think with a higher low in here, but as always, a false break of support would be the best case scenario, and that may indeed happen on the smaller time frame. So we'll investigate that. There's a whole bunch of stuff to look at then. There's my trade line. Break below, consolidate, re-entry, retest, away we go. So it's a pretty common theme. And I see Ash in the room. G'day, bud.
Hi, mate. How's things?
Yeah, not too dusty. I've got a question for you.
Yeah.
And it's on the footsie.
Oh, yeah.
So I was looking at this and I thought, if I have a look at that level there, which is where price is currently battling, and then extrapolate that just a little bit further, that's a pretty strong level of resistance there. And last time we were above it, we broke back below it and went for a reasonable distance, came back, failed to get above, came back, failed to get above, katunk. And now we're kind of in the similar position. Are you thinking there's a potential change of direction coming on the footsie?
To the downside?
Yeah.
Yeah, do you know, I think there's some really interesting dynamics going on at the minute. It's making kind of reading these not the charts so much, but the actual sentiment just that little bit harder. The numbers have started to weaken sufficiently, I think, for people to expect a potential pause. You know, we've seen the Aussie. You were absolutely right on that call. The Aussie RBA paused the other day. And RBNZ obviously did raise much higher than expected.
Yeah, 0.5%. Wow.
0.5%, yeah, which is quite substantial. But obviously everybody's waiting for the Fed. That's the big thing, and the FTSE will be driven by that as much as everything else. We've seen the oil stocks take off because we had the cut in supply announced by OPEC Plus, which did help to drag the FTSE to the upside. But what we've really got going on now, that's an interesting chart, isn't it? That suggests oil's coming down. You know, you don't leave a gap in the market by that distance without this one coming back.
Well, if you do leave a gap, you keep driving long. You don't hang around here. What's that all about?
Yeah, absolutely right, mate. Well, one thing you will drive long, but it does suggest that there's if that does happen, that would suggest there's a big dip in oil coming. You know, whether it's going to close this gap now or whether, as you say, it drives long to the next level of resistance, and then we do just see an absolute spanking in oil at some point is the big question, because that's just too big a gap to leave for too long, I would suspect. But the recession concerns would potentially drive that oil price lower anyway. You know, even though we got the cut in OPEC Plus supply, we've got the recession concern. So this is the interesting dynamic. We've got weaker numbers coming out from the States, including jobs numbers, which is the big thing, which does kind of put the pressure on the Feds to potentially pause. And we have at the same time the numbers showing potential recession. So or the recession is, we know that the recession has been a potential for a while, but the recession is imminent. So now the question comes: do you trade the markets and indexes and the bullish currencies, if you like, long because of a pause, or do you look at it and say, well, actually, the likes of the FTSE, the Nasdaq and the Aussie, as an example, are going to be weaker because, yes, there could be a pause, but there's also going to be a recession, so a lack of demand in certain commodities, and obviously into stocks as well. So this is the major challenge, and I would suggest, certainly with the FTSE at those particular levels, the likelihood is that it would probably ease back a bit, even with a pause, because it's just a pause. You know, there's still decent money to be made by holding bonds and putting your money into a checking account instead, and allowing the bank to pay you interest rates with no risk. So why would you go and buy FTSE 100 companies that are actually going to suffer because we've got a recession kind of looming, even with a pause? Because as I say, a pause is going to still keep those interest rates high. It's not like if they paused at 3%, I get it. I get the case for maybe buying stocks and going long. But if they see a little bit of easing back in the employment data, yes, that could suggest that, okay, we're done for now. But it doesn't suggest that the inflation battle is won until we actually see the CPI and PPI numbers come down. So it's much more likely that they say, we think that we've done enough and we will pause here. We're going to break things first, and then we might actually start to ease. But I still don't think that's, I would have thought a minimum of 6 months away. I don't think that's imminent. So to me, the FTSE looks like it could be weak. Now, it doesn't suggest that right now. And
it does to me. It suggests that that there's a false break of that level.
Yeah, well, when I say right now, I suppose I mean this morning.
I don't mean no. Okay, I see what you're saying. Me too.
Yeah, so because so this is sort of like some of the numbers I'm focusing on as well. Now I've been chasing after the Aussie for quite some time, and I'll show you some charts first, and then we'll have a look at some of the data, because I was trying to get into I did get into the Aussie dollar yesterday, to some success as well. It went very, very well, but there was a decent bar that did suggest this one here. It was actually on the hourly. This bar here suggested buy, so I did buy in. The market went up. Now I didn't take profit, but what I did was move my stops to break even, because the risk here is that the NFP number on Friday doesn't come out weak. Now there is enough evidence to suggest it will, but I'll show you that in a moment. But I thought, you know what, I don't really want to have any risk in the market, because I've got a decent price, and if this does continue to ease up, then I should be able to then start to shift the stops up. Now, unfortunately, or maybe fortunately, we'll see, this stopped me out overnight at break even. But there's still a potential opportunity, and what I'll be looking at now with the Aussie dollar. Now, end of day traders, I did actually put end of day traders should still not be in this trade as yet. Intraday traders had this one opportunity. You could look at this bar as an opportunity, but I don't like it now because of this trend line. So I want to see this pop up, pop back, and then I'll be looking for a trade long, and I'll probably put my stops under this trend line here. So under the weekly pivot. It was under the monthly pivot before, but under the weekly pivot. Price risk to reward, it might be similar. Let me just see what I was at. I was at 700. I was there before. Yeah, it's about 30 pips. So it'll be about another 30 pip stop loss, something like that. And looking for a potential move right the way back up to this horizontal level here. There's a chance this really does kind of go, but there might be, and sorry, no, it wasn't that one. It was lower than that. It was, I think, that's where we are. It was probably this one here, actually. Yeah, it was this one here. So back up to the old monthly pivot. So there's a few pips in the offing here. There's 150 to the upside, and potentially a 30 pip stop loss. So 3-4 to 1, maybe sorry, a 4-5 to 1 trade is on if we can get the right entry. So that's the first thing. Aussie yen. Now the Aussie.
Before you leave that one, I called that short. That was my watch list on Monday. It was Aussie dollar short, Euro Aussie looking for a lower high. Yeah. But of course, it didn't set up for me. But there was a cracker of a setup there yesterday on the 4-hour chart. I noticed when I had a look this morning.
Yeah. Do you know, the worst thing for me was that if I'd been awake, then I would have taken profit, and I would have taken profit when as soon as it broke through this little 15-minute trend line here and got that retest. I would have been out. I would have made a little bit on this. I would have made not quite a 1-to-1, but I would have definitely closed out the position. Because it just looked like, okay, I still think it's bullish. I still think there's a decent chance we get bullish, but it didn't look like the timing was quite there. So I think we're still waiting on the timing to be correct with this one. And as I say, got to take this trend line out for me now. Probably comes up to the daily pivot, and if it comes back again, then I'll try and enter another long. But that's that's got some unwinding to do. And as I say, the pressure is all on the fact that we've got the possibility that NFP doesn't show the weakness that we hope. But I'll show you why I think it will, and I'll show you why I think that that I think speculators will buy into this before we may be able to get safe again, and then see if the number helps us out. Because there's always a risk that that the number doesn't help us out. But we'll see with that in a moment. Aussie Swissy I would have been up for, but I don't like this bar at all. The Aussie yen I also like for some upside. And that's if it comes back into this. Yeah, the Aussie does look good. There's a little potential hold here, so I might be trading this Aussie yen if that can just hold that level. Looks about right here. Yeah, that does look about right. Nice horizontal level here. So any sort of hold here, I'm getting pretty close to trading this one long. So I'm long Aussie yen. Seasonal data would suggest that we do look for upside. If I go in Aussie yen, I may not go Aussie dollar. So I'm going to have to look at how the dollar yen looks to see which is going to be the best pair to trade the Aussie against. I like the Aussie at the minute. And as I say, I'll come to why in a moment. Aussie, the dollar yen. It looks to me like we might be just sort of on the edge of the head, and we might well be looking to create an inverted head and shoulders here. So the yen
very nearly went long that this morning.
Yeah, it could be that the yen is the one to trade against. So I might well go. I might flip it and go Aussie yen instead of Aussie dollar. Now that would have to play into the fact that the FTSE is looking to stay bullish for right now, if I'm going to trade that. Because what I don't want is global risks to kind of come into play and then the yen be bought up. So I'm gonna monitor that, but I do quite like the way that the Aussie yen looks at this stage. Now let's have a quick look at why I quite like the Aussie and why I think that the dollar might be showing some signs of showing some cracks. So this is the first aspect of the information, and what we've had really all week. So this is the start of the week. This is Monday. What we've had all week is PMIs, yes, under 50, but beating forecasts. Lots of these numbers here, N1 inflation gauge actually under the level, so that does suggest that inflation's coming back, which doesn't suggest bullish Aussie necessarily, but building approvals were a beta forecast and in positive territory. Home loans again beating both forecast and previous, and retail sales beat forecast, didn't beat previous, but it's still positive. We come down a little bit further and we see the commodity prices again, dipping, which doesn't really support the Aussie, and that's disinflationary, so, or deflationary actually, is in negative territory. So that's that may not be such a good sign. We'll come back to that in a moment. We see here interest rate decision was left on hold, and they seem pretty dovish in their comments. I have to say, services PMI slight beat under 50, but it was a slight beat. The RBNZ did their thing, and then we had overnight from Australia. We had trade balances. Where we are, always Thursday, isn't it? So trade balances, imports and exports, and trade balance really positive. So lots of things to like about the Australian economy. It looks like it's doing okay, and it looks like they might well have pitched it just about right with the interest rates hold for right now. Now we come to the dollar and what's going on with the US, and the biggest numbers here. Okay, the PMIs. This is really weak. 46.3. That's really taken a big dip below 50. So that is suggesting recession already with the ISM manufacturing. But this is the really important number. Employment down 46.9, under 50. A big dip from the previous print of 49.1. Now we go down to Tuesday. And again, we see the JOLTS job openings, employment data under what we had previously and under forecast. There's two employment numbers there, which are really, are showing signs of stress in the labor market, which is what the Fed have always said that they need to see. Now we go down to Wednesday, ADP, non-farm employment change, under expectation and under where we were previously, substantially under. Then we go to the ISM non-manufacturing, and we see the employment number again. Okay, slightly above 50, this one, but still under forecast and under previous. So this is putting stress. This is showing stress in the labor market, and I think people will trade the dollar short if they get a low NFP number. Now, we've had three numbers that suggest that we're getting weakness in the labor market. So that is pushing me towards thinking it's worth speculating that Friday's employment data is going to be weak. Now, we do have one more today. So we have jobless claims and jobless claims and initial jobless claims, continuing jobless claims and challenging jobless cuts. So this will probably form enough for investors to say, if this comes in weak, we're speculating that the NFP number on Friday is going to be weak. And I think that is the driver. I think the NFP number on Friday is the driver. Many markets will be closed, so you want to get your positions, probably on. But that to me is what might well move the dollar lower. And because what we've seen from Australia, the Aussie higher, because what is being potentially priced in right now is parity for where we are, or possibly even a 25% 25 basis point rate hike from the Fed. Now, if that's been priced in and the jobs numbers is weak, then they need to reprice parity. When I say parity, I mean no movement now from the United States. Now we've had no movement from Australia. So I think that there's a case to be made for upside. Now, the last thing that we do need to consider is the seasonal aspect of all this. And let's see if we can get this on. Can you see this chart here? Are you still looking at my? Yep. Now this is the Aussie yen. Aussie yen April right the way really until the 13th. Decent run to the upside. It's when you bring in the Aussie dollar where things get interesting. And when you look at the Aussie dollar, the reason this is interesting is let's bring it in from today's date. So we got the 6th of April. The 6th of April until let's say the 13th, so about a week. Big spike to the upside over 23 years. Now, when you look at the returns down here, we've had 3 years where 4 years actually. That one's flat. That one's flat. That one's flat. There's a couple of flat years in here, but really 3 big dips over 23. So you're looking at 10% of the time this thing goes lower. Now it's not 90% of the time it goes higher because of the flat days, but the flat periods over the years. But it's still a decent amount of time. There's 5 there. There's 5 there. There's another 5 there. So 15 out of 23. This has actually moved higher for the Aussie dollar over 23 years. Now, if we look in at all the time frames here, over 15 years, we're looking at 1, 2, 3, 4, 5. So 10 out of 15 were decent positive moves. And now if we look at 10, we've got 1, 2, 3, 4, 5. Well, 1, 2, 3, 4, 5. So it's about 50-50, but only 2 that were negative. So the bias is to the upside over 10, and then over 5, we see 3 out of the 5 years positive, and only really last year where it was negative. So that does actually suggest seasoning. If we think about what the seasonal charts are really sort of intimating, it intimates that during this time of year, Australia has better data. It's always going to come back to that. Has better data than the United States. That's what it kind of suggests. Now, If that ends up happening, like we've seen from Australia, beating forecasts, and we've seen some of the weaker numbers coming from the States, that pushes us back to say this seasonal patterns has got a greater likelihood to work out. So the risk is NFP, but the evidence right now is pointing us towards the Aussie dollar long.
Interesting that the trade balance actually backs that up completely, doesn't it?
Exactly. Yeah, exactly, mate. Yeah. Well, this is the thing, you know. What you mean that the trade balance backs up the fact that Australia tends to be strong at this time of year?
Yes, yes.
Exactly, mate. Yeah, yeah, exactly.
So I wonder what commodities that includes. Of course, we're coming out of summer. There would have been lots of crops exported, beef, sheep, that sort of stuff, I would imagine. Yeah, it kind of makes sense.
Yeah, yeah. Well, the other thing is that China have you know they're still kind of reopening, aren't they? They've been open for a few months now, but that's a huge customer back for Australia. Now we saw last year the seasonal data negative for Australia. Now that may well be. I can't remember. I don't know when China locked down last year, but you know they were struggling in China last year. And you know, you look at some of this as well, services PMI, and I always look at the China data to see what might drive the Aussie dollar. Decent numbers from China, you know, we'd have to look through a few more, but that services PMI number was good. It was solid, and that suggests that there's further growth for the Australian economy. So I like the case anyway, mate. That's the bottom line. Whether we can get in some trades is the question. Now, with if we go back to the charts and just address the FTSE, then what I did see with the FTSE was this this trend line here.
Classic slingshot.
I mean, it's probably there. It's probably there because you got touches here and this resistance touch here, so it might well be there. There might be a slightly different one, but you know, if this closes above this level, and the FTSE's opened up pretty hot this morning, Shell up nearly 2%, BP actually only up 0.5%, but the likes of Rio Tinto and Glencore both near 1% positive. So commodity stocks are doing pretty well in the United Kingdom, and not too much negativity. Some of the consumer staples and the banking stocks aren't doing quite as well, but generally speaking, the FTSE's opened up as a bit of a hot market so far this morning. So we're looking at this on the hourly. This closes under this level on the hourly. There may be a case to be made that this is a minimum going to pause, at best going to pause. It doesn't suggest that we've got anything to the downside though so far. If it closes above, then there might well be a case to be made that we're going back up to this level, and we see the test of this area instead. And if I'm honest, mate, that looks more attractive. You know, that's another 2% away. FTSE looks like a potential 2%er, and if you look at this red bar here, you'd probably be quite interested with getting an entry above there, right?
I can't see it going long from there right now. I'd need to see that bar broken and retested. I think the top of that bar,
this one,
because
yeah,
because that's that strong resistance level, which is what, around 76.60, I would imagine.
77.20 on the futures, 77.30. Yeah, we do have resistance here. You're absolutely right.
Well, if you go to the weekly chart and come out, you'll see how strong that level is.
Yeah, I do see it. I do see it.
Actually, it's a bit different on the futures. Mine's bang on that level.
Yeah. Yeah, I do wonder whether the FTSE's got some easing to the upside. Now, the other thing with that, of course, is that it does make the case even further for the Aussie yen, because that does suggest, you know, as I say, commodity stocks, you know, in the FTSE 100 right now doing very well. Rio Tinto is an Australian company, and they're doing very, very well right now. So I am looking at this Aussie yen. Oh, now with the one last thing actually on this, mate, Aussie dollar. Intraday traders might well be able to get into this relatively early. End of day traders are going to need to. We haven't had anything from it for end of day traders. What we did have was the first signal that looked pretty good was this bar closing above the trend line. But yesterday's bar was negative. The only gleam of hope that we really had was the fact that it held this this horizontal level. So we've still got a higher high, you know, albeit just in a very tight area. But we've got a higher high here, and this is still creating a higher low. So this is potentially showing us that there is a weak, albeit weak, but that's how many of them start, as weak trends. But it is there. There is a potential for this to go higher because the trend looks like it's holding. End of day traders need to see this bar to be, this bar ended up closing too far below its 50% line for it to be a decent signal to buy. But what we're looking really for, end of day traders are looking for this bar to show some positivity. And if they get it, then there's another trend line right here. Where is it? This one here. That's the other one. No, it might even be slightly further out than that. No, that's the other one. You can't see it so well on the daily, but if you look on the 4 hourly, we've got this touch here, this closing touch here. We've got this touch here, and then it kind of goes through these areas here. Bit messy, but you can see that there is something there. So this bar today needs to get above there. For me, somewhere around about 0.7, 0.67, maybe 0.6715 or something, which would be back to its highs. That would be a really strong signal. If it doesn't do that, and you can see that it's also the same as the horizontal level. So got to get above the horizontal level by the end of today. And if it does, I think end of day traders are coming in. And the intraday traders will, if they get a nice entry, will benefit from that. Pure speculation, as all these trades are. But the question that I always ask myself is the risk worth the reward? And if this takes off, this at minimum is going to this point. So if you can get in, you know, somewhere along this trend line here, which is probably, I would have thought here. I mean, it's very very steep, but if you can get in somewhere around the horizontal level, you know, break and retest with stops at the lows, then if that's going to go minimum just to the upside, you got a 30 pip stop loss, and potentially we're looking at near 90 to the upside. Not quite, but it's you know, better than a 2-to-1, but and getting close to a 3-to-1 trade intraday. The end of day traders probably won't be too far away from that either, to be honest. I mean, they're probably going to get a 2-to-1 if things work out. You know, if you do get that bar, this bar looks a little bit more friendly now, so they may well get a 2-to-1 as well. So I think there's a case in made to continue to look at this at minimum. I don't think the triggers are quite there yet, but I do think it's looking pretty healthy.
If neither of those scenarios play out, there's one more that I can see. Yeah. And it's what I've been waiting for. And if you go to the daily chart, there's a channel that's pretty clear, and I'd be waiting for the bottom of that to break. Yep.
Yeah.
Because we're going top to bottom, bottom, top, bottom, which is where I picked up, you know, the short from 2-3 days ago.
Yeah.
I want to see those pivots and the bottom of that channel, which of course is a trend line or a trade line, broken, and then back above all three, pivot, trade line, then retest it. Then I think you'll see an explosion out of the top side, because if you look at that daily bar on Monday, everything's inside that bar at the moment.
Yes.
So when that breaks, it's not going to go a small distance, I don't think.
I think you're right, mate. Yeah, I mean, there might well be the same again, basically, if it does break.
Yep.
You know, that would be back to 100% of the level. So you could be looking at looking at this area, which would be exactly where my target were. Actually, my target would be a little bit lower than that, but yeah, that would be a fantastic move. It really would.
Yeah, so if you could pick it up off the pivots, with a, I don't know, 30, 40 pip risk, you could do very well out of that.
Yeah. And the big question is when you get in with this one. What do you need to see to kind of, if people believe in it, it'd be interesting to sort of hear what people's thoughts are in the room. Catherine, just another thought.
Well, two things for me. It's two things for me. It's a break and retest of that trend line.
Yeah.
Or it's a bounce off the pivots at the confluence area where that trend line hits those pivots, and then a higher low. Yeah. Either one of those two things. That's what I want to say.
Yeah. Catherine is just saying that she's had a thought that the Kiwi deficit, so the Aussie Kiwi looks positive given the Aussie surplus, but with the Kiwi rate hike, not sure how much of a lasting opposing impact this would have. I think that's really good, a really good question, and this is the challenge, I think, and this is what we've always got to kind of present to ourselves is the potential for upside and what might drive it, and the potential risk. What I find interesting about the Aussie Kiwi is that it has broken down, but considering we've had a rate hike from New Zealand and a pause from the RBA, this hasn't broken down that much. So the question really is that move, was that really, well, it wasn't quite priced in because it was a surprise that they raised when they did, but how close are we for that to be priced in? I don't like the break. I don't like the breakdown with the Aussie Kiwi, if I'm honest. And the Kiwi might even be something to look at against the dollar and the yen as well. It might be well worth considering the Kiwi instead. The seasonal bias is for the Aussie, but the fundamental bias is probably pushing us towards the Kiwi. But I don't like that. What I wouldn't mind, what would sort of like push me back towards the Aussie is if this does manage to kind of get back above area, back within the range. That would suggest that that this is relatively stable. So I wouldn't really want to kind of mess with this one, if I'm honest, because the reason that the dollar I find the most interesting is because we're still speculating about what the Fed are going to do at the next meeting. And that's what makes the dollar, to my mind, sort of a bit more value, or to try and sort of like sell it off against. And also, as I was saying, the seasonal suggests that for whatever reason the United States tends to provide weak numbers at this particular time of year, and that's what we've seen. When it comes down to New Zealand's numbers aren't amazing, but they have just raised interest rates, so that does kind of like push me away from it. But if we have a look at the Kiwi,
it's a curveball what they did on Tuesday or Wednesday, whatever it was. Threw a curveball into it.
Yeah, they did throw a curveball into it. The Kiwi does also look interesting against the dollar, and actually very, very similar with the channel. Looks like we got this channel here, which we just rejected against. But any sort of turnaround in this, and it's going to go probably through that level and maybe back to these highs. Not sure if it's got the same potential.
Hasn't got the same commodity push, with commodities strong in particular. When you pointed out, your BHPs and your what was that Western Australian company you mentioned?
Rio Tinto, Tinto, BHP, Glencore, all of them in positive territory this morning.
Yeah, the Kiwis haven't got them.
Yeah.
So that kind of pushes the Aussie ahead. Whilst ever they're strong. If that changes, then so does the dynamic.
Yeah, I think that's right. And as I say, just. It's not the best information, and I wouldn't sort of like rely on it too heavily. But if you kind of, oops, what's happened there? I've got a new desktop there. Where's my did I close down all my? Oh, I did. I just closed down all my charts. Well, the I can't show you it because I think I just closed it down. But the seasonal bias is also for the Aussie versus the Kiwi. So the Aussie actually comes up pretty hot at this particular point. But you know, as I say, the question really comes in: do you believe in it? Do you believe that the Aussie dollar is a worthwhile trade to try and take on, or the Aussie yen is worthwhile trying to take on? That's the first thing. The second thing, after you've answered that question, is what do you need to see to put you into the trade and speculate? Because, you know, as I say, we got to recognize that we are still speculating. We're really speculating on NFP. That's what we're trying to ascertain. What's going to happen to that number? Because if it does come out and it is weaker than expected, then we could. Oh, here we go. I seem to have lost that for some reason. Here we go.
Yeah, I really think there needs to be some sort of disparity between the forecast and the number to make too much difference, to be honest.
Yeah,
because
I agree.
Hmm.
I agree, and also there needs to be sort of some genuine weakness in the NFP number. But, you know, let's have a look at what the forecasts are, because let's see what the market is expecting, and it might well have changed now. Right, here we go. So lots and lots of holidays. Forecasts are in line. Yeah, I mean, it is looking for a slight dip. This one is quite important as well. So average weekly hours, but it is going to be this non-farm payrolls. Does that dip sufficiently? And as I say, if it does, I can see the dollar weakening sufficiently, you know, substantially. Now, the fact that we've got bullish markets today also does enable the Aussie to have another kind of case to be made for.
I'll give you one more case.
Yeah.
If you go to the dollar index monthly chart.
Dollar index, okie dokes. Yeah.
And draw that channel, which you don't really have to draw. You can see the horizontal level there, but it looks more dramatic if you put the channel in. Actually, your channels, you mustn't have the high of that bar. Yeah, that's more like it. That's a classic false break scenario for mine.
False to the downside.
Yeah, that's coming down.
Bram retest there down. Yeah, I see what you're saying.
So there's another case for anything against the dollar, I believe. And, you know, the really good thing is NFP might give you even a better price. But I think if you're prepared to trade that monthly chart, you won't be too far out. A lot of people say monthly chart. Why would I trade that? Why would I trade that? It's not that broad.
Yeah, I mean, do you know the big problem? The other problem with you know, trading the Aussie dollar is that you are going to lose on swaps. So so timing is quite important as well. Gold is fascinating. Very, very close.
Yeah, I got that 100% right. I said it was going to range this week, right? Bang. Kaboom.
Well, you know what, mate? What you did get right is that you didn't go near it, because actually this is the thing about all these markets. If you don't understand them, and I know when you're starting out, it's hard to get an understanding of anything, but if you don't understand a market, it's better just to kind of avoid it, unless you've got the passion to try and get to the point where you can understand, which of course you can. But you know, gold is one of those that it seems to have different aspects at play at this particular stage, and really the opportunity, you know, for me, any longer term opportunity for gold is well and truly past. I think this was the best opportunity, the cleanest, I suppose, the clearest opportunity at 1800. So at that point you could have got into this thing, but it's edging towards the trend line and edging towards this all-time high at near 2100. So we're only 70 dollars away from 2100 now, which is not really
The
too
cool
far.
part is the breakout trade's absolutely smashing it.
This one, yeah. Oh, right. Well, yeah, that's a good thing. That's a good thing.
Yeah, its win-loss ratio at the moment's pretty good.
That's great, mate. That's great. Well, it obviously sort of suggests that gold is the one, certainly for right now, isn't it?
For now, yeah, for sure.
Yeah. So that's what I got for you, mate. The Aussie is obviously the best thing for me to look at. FTSE 100 looks pretty hot right now, and there was a slight opportunity to get into this morning, but I passed it up as I was looking at to see whether the Aussie yen was going on something. But this thing has done pretty well so far this morning, up 0.5% on the hour. 0.5% on the day in an hour, which is a pretty good move on the FTSE.
Yep, pretty cool. Well, our edge on euro versus dollar has just about expired. Not that the daily pivot has been tested, but it's very close to that. So that's boring. I can't really give you a call on that unless, of course, it disappears from now, which is I don't know, with that with the dollar index. If you go back to that chart and go to the weekly and put a horizontal level there, yes, bingo, exactly where we are.
Yeah,
that's interesting.
It is.
That suggests we might see a bit of upside today.
Yeah, I agree, mate. I totally agree. Which I'm really glad actually. What you've given us a something else to look at with that Aussie dollar, because if we did see a bit of price action kind of around this this channel line, it would make it a lot more attractive if we did come down and test this area. And as you say, bounced away from it. It would make it a lot more attractive.
And the dollar
no
index chart
yet.
Suggests that may be the case.
Exactly. Dollar index does suggest that may well be the case. Yeah. And today's jobs numbers could be, the driver for that. Maybe the jobs numbers are slightly stronger. Now, if that was to happen, if today's jobs numbers are stronger, that puts Friday at a very, very difficult. That makes the whole thing on Friday very, very difficult because you've got some strong and some weak numbers, coming from the United States. So probably nothing that I guess
you guys in the right time zones are probably going to be okay. If I'm looking to trade tomorrow, I've got to sleep all day and wake up, which is okay because the Masters is on. I can wake up at like midnight and see what that NFP number is actually doing, and then I can watch the Masters for the rest of the day. That's not a bad idea.
Not a bad idea. To be honest, I know
it's Alison and I's anniversary tomorrow, so we might just go and have a long lunch.
Yeah.
And then I can sleep that off. Well, mate, what a plan. It's all happening for me.
It is a nice plan, mate, but you know what? I think it's one of those days I'm taking it off. I'm not having any trading going on for the whole weekend. It's one of those that I'm a little frustrated not to still be in this this Aussie dollar position, but when I kind of consider it, it doesn't really matter. If you can't get
this one, there'll be a better price, mate.
Well, better price.
I reckon.
Trade, it'd just be something else. So I'm not too fussed about getting it. If it happens, it happens. I'd like to get on the Aussie somehow, but I'm not going to put any time pressures on myself, because if the market doesn't shape up and I've missed out going out or doing whatever, then trading is not really serving its purpose for me.
Yeah, cool. Well, I don't think we've got too much more to add, Franklin.
No, I think you're right, mate. I think you're right. I think we are done and wrapped. If anybody's got any comments,
you're in holiday mode. I'm just about in holiday mode. I haven't got anything that's triggered. The gold trade hasn't triggered. So it's all quiet on the Western Front.
Good stuff, mate. Let me just see if anybody's got anything to add. Oh, Phil's just popped in the room. We might wanted to say something.
Yeah, you want to say, what are you just starting? He's of course in Australia, and we went on to daylight saving
I
We could do
might
that
miss that.
last Sunday, so we're an hour earlier than we would otherwise be. And I think Phil's probably been asleep all day anyway. He doesn't do too much that far.
That's the life. Okay, well,
No,
if nobody's got any other comments about the markets or anything else you guys are looking at, then we will wrap it up and wish you all a very happy Easter. Enjoy
I
your
will
break.
just go to the Euro before we do. Sorry,
Go and have a
before
quick
you
look
go.
at the Euro. We're not here Monday, just as a reminder.
Yes, it is a Thursday thing that I look at the Euro and try and wrap up the week with a winner on the Euro, but it's looking less and less likely because what we're looking for pretty much every day, much less every Thursday. And it happened yesterday, but there wasn't much to gain out of it, to be honest. The daily pivot test of the Euro, because we just hung around here, and really the only way you could
mate,
get into that.
Have
I
I got the
sharing?
screen? I think I
I
can't.
probably didn't
Oh, there
press
you
the
go.
button hard enough. Yeah, sorry about that.
It's all right. I seem to have frozen.
Yeah, no, I just think I didn't press the button hard enough. Simple as that.
No worries.
And hopefully you've got it now.
Probably my Zoom, so you can still hear me, but I can't see anything. My end.
It's just changed. All good. So, like I said, yesterday was a double up. There was no test on Tuesday. So that makes the likelihood, I guess, a little bit stronger that it will happen on the next day, and it did. But there was very little to gain out of it because we didn't get far enough away from it, and it looks like the same thing's going to happen today. However, if we don't get that daily pivot test, and we did, for instance, get down to here, then it becomes far more interesting because the further it gets away from there, the more likely it is that you'll get a trade towards it, not necessarily to test it, but towards it, as price does bounce off these horizontal levels. So if you are fortunate enough to be awake and price gets down to here without testing the daily pivot, I'd be certainly looking for a rally of some kind before the day ends. Looks to me like we're in a bit of a range here as well. So that level therefore, whoops, that's not the right one. That level therefore becomes just a little bit more interesting. It's probably here somewhere. So maybe even not down that far. If you get down to here, hit DS1, get back above it and retest it, then you've got to trade long and get some profit in the bank round about the daily pivot. Then you've got on your case what looks like a head and shoulders forming on the hourly chart. That may be interesting to have a look at later in the day as well. As you get up to this level, looks to be confined to a fairly tight range though. And as I said that on Monday about gold, and it just took off like a skyrocket. That's interesting. I'd like to see price come down here, give me that false break, then we can trade it back to the daily pivot and maybe look to trade that range for a few days. But anyway, as Ash pointed out, tomorrow is Good Friday, and there will be very, very little action up until the US session, when the US will be trading, as I understand it, and the NFP number will be posted, and the market should move on the back of that. Ash very keen on the Aussie long. I'm very keen on CAD yen long, Aussie yen long, CAD Swiss long, everything long at the moment. If I miss CAD Swiss, it's okay. I've got it covered, I think, on CAD yen. So those of you who've been following the CAD Swissy saga with me will probably be wondering why I'm not trading that, because there's better reward to risk on CAD yen, I believe. So we will leave it at that. Gold, I think Ash has left. Can't see him in the room. That's okay. Gold hasn't triggered. What do I think is going to happen there today? Sweetie said it was a full moon yesterday, which means we'll be looking for something to change. Did change yesterday, did nothing. Gave you a doji bar, a dead set doji bar. Yeah, it's tough. Tough with gold, I reckon. Now it's past that 2,000. I suppose you can look at a retest of that 2,000 mark. That makes sense. But yeah, it's tough to be calling that short at the moment. But full moons do funny things, especially to people. And people, by and large, the people, the things that actually make these things move. Trading, world trade at the moment is favouring those Aussie good fortunes. Pardon me. So I think Ash might have a very good point that the Aussie is potentially one of the ones to follow at the moment. And like I said, the dollar index is telling me that today may well be a little bit of a rally. Not saying it's going long, but I can definitely see a little bit of a rally on the dollar. That will help the case of gold short, and that would help the case for the Aussie to get down to the bottom of this range, hopefully break it, then get back above it. Beautiful confluence area here with those two pivots. So if we were to see that, a mini break here, back above, retest the confluence area, then go long. And if it's still inside this bar, look out when it hits the top of it. I think it'll explode like a rocket. We shall see. All right, that's it, guys. Thank you for being our trading buddies for the week. And we look forward to your company, not on Monday because it is a public holiday. And we'll be back Thursday at 5 minutes to 5 Australian time, Phil, at 5 minutes to 8 UK time, as always. And, of course, at 5 minutes to 3 Singapore and Hong Kong. I hope we'll see you then. Have a wonderful Easter break. Take care of yourselves and try to love someone. Bye-bye for now. See ya.
Thanks, Jeff.
Thanks, Phil. See you, mate.